Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, September the 27th. My name is Eric Wilkinson, and some of you may recognize me from Fox Business, CNBC, and even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. First off, let's talk about yesterday's FOMC meeting. They did raise interest rates by 25 basis points as expected. One thing we were looking at is them to change some of what they were talking about in the minutes as to the future interest rate increases. Now, they're continuing to say that they're going to continue to increase interest rates that according to their mandate. I've been talking about, yes, we are seeing a good economy, but it's not like really overheating, and I think that they need to let it breathe a little bit to allow this all to keep going, because the mandate is to have the interest rate above inflation. Well, inflation right now is at 2%. They got it above 2% at 2.25%. So we are above that mandate. And having said that, if they go too far, it's going to cause a ripple effect down the line. Even Trump was talking about why increase interest rates when we have this huge debt. All that makes it all the more difficult to pay off that debt. It's a similar situation with housing. I talk about that where interest rates increase. That means you're paying more towards interest than you are towards the principal of that home. Therefore, you have to buy a smaller home in order to afford yourself that home in it. Okay, so it's not equivalent. You can buy a bigger home at lower interest rates, right? Because you're paying off principal rather than interest. Similar situation with the government debt. We're paying off interest now rather than principal. And Trump is saying to the Fed, why are we doing this? We need to pay down this debt, especially while we're starting to move along. All of those things, very similar arguments. So having said that, that's why we saw that last 15-30 minutes of the day yesterday. It was pretty ugly. We'll take a look at that on the daily charts when we start looking at that. But let's get out this economic data. Across the pond, not a whole lot going on over there. We had, here in the United States, though, we had core durable goods orders. Now, remember, core durable goods orders is stripping out transportation. And durable goods are anything that we purchase that we expect to hold on to for longer than 3 years. Airplanes, well, not really us for airplanes, but companies, cars, automotives, appliance, stuff like that. So when you strip out the core durable goods, it's supposed to smooth that number out because airplane orders or cars are relatively sporadic in their purchases and things of that nature. So it could be much more volatile. So when we strip those out, we get core durable goods, and that comes in at 0.1%, expected to be 0.4%. So expansion still, we're not negative. That's good. Then durable goods orders really blasted out of the park. They came in at 4.5%, expected to be 1.9%, and they revised last month's number up from negative 1.7% to negative 1.2%. So nice revision on the durable goods. So people are either buying cars or airplanes for that matter. And then finally the other one we got was final GDP, came in at 4.2%. That's gross domestic product, expected to be 4.2%. And then we also got the price index for GDP came in at 0.3%, expected to be 0.3%. Wholesale inventories rose a little bit to 0.8%, expected to be 0.3%. They did revise last month's number down from 0.7 to 0.6, so that meant inventories were less than what was expected over there. We're seeing more inventories again, this preliminary wholesale inventories rising. Is that because they're seeing the overall economy starting to ramp up and they're starting to build inventory ahead of that so that they don't run out of supply? That's the one thing we have to really kind of keep our eye on the ball with this inventory number, is that sometimes in a good economy, rising inventories isn't all that of a bad thing as long as you are getting ready for, say, maybe Christmas coming up and you want to build that inventory ahead of a really good cycle coming around the corner. So that may not be that bad of an idea. All right, pending home sales came in at negative 1.8%, expected to be a negative 0.2%. That could all be culmination of what I've talked about with these interest rates rising. People are used to these really low interest rates. They're used to, if they were out shopping for a house, a 3,600 square foot house, and now they're having to look at a 3,000 square foot house. That isn't appealing to a lot of people, and paying the same amount in their mortgage. So that could be what we're seeing there, and that could be an issue with the housing problems. All right, so also unemployment claims coming in at 214,000, expected to be 208,000. And we got Mario Draghi speaking later on today, who is an ECB president. And then even later on, probably after the close, we've got, while I'm doing my webinar, we got Powell speaking. So we could see some things coming out there. Also, forgot to mention natural gas storages coming in at 46 billion cubic feet, expected to be 64 billion cubic feet, so larger than expected drawdown there, or at least not a build. All right, and we would expect that number to start going up, especially with the fracking and natural gas being a byproduct of that. To me, this feels like that is usage or demand. All right, on to the overall markets. We've got crude oil moving back into the $72 handle. I've talked about this. It's up. It's bounced up against that value area high and has fallen away today. It's in a really tight range because I've got the value area high here, and that is obviously acting as a resistance. We can see that it's bouncing on it several times. But the 61 Fibonacci extension is also acting as a support. So we've got a very tight range here. I expect this to roll over below the 61 Fibonacci and back towards the value area. But, that being said, it's not really showing that weakness right now. I just think that the supply-demand type aspect is going to be what shows up there. Oh, gold futures finally giving up on that 1,200 psychological level. Broke below that yesterday, settled below that, and today are continuing down into further negative territory. Once we broke below that psychological level, I think the bulls have started weakening, and that's what's really causing this to roll over. I don't have a position in it. It's just with the overall global economy doing well, the dollar's gaining strength, gold is just not that appetizing, nor is a cryptocurrency, which is supposed to be easily transferable between different currencies. That being said, not seeing a lot of demand for this, and we talk about this every day. The volumes continue to decline in Bitcoin, which doesn't bode well for the upside for sure. All right, we've got bonds. They did rally back yesterday after the Fed raised the interest rates. Obviously, I was talking about this. It's already priced in. They had to come back. They were just overdone to the downside. So they had to start migrating back up a little bit. And the Fed didn't signal that they were going to start really increasing that interest rate raise aggressively. So the bonds had to come back a little bit. Giving up some of that rally could be more profit taking coming in today after yesterday. Also, that big sell-off at the end of the day, which we'll talk about here as we're getting into the equities, also gave upward pressure to the bonds. As when you see the equities falling out of bed, it's a flight to safety. You're throwing your money into something that is government guaranteed. So that's what we are also seeing towards the end of the day as well. VIX popped into the double digits again, up into the 12 handle, not quite to the teens yesterday. With that big sell-off that we were talking about. This is the drop we're seeing in the NASDAQ coming back today again, up about 100, or sorry, this is the Dow Jones, up almost 200 points on the day. Remember on yesterday, we were up about 150, 200 points talking in the daily market commentary. By the end of the day, it had dropped, or it was in negative territory by over 100 points. Today, rallying back almost 200 points in the Dow Jones and back above this Fibonacci level right here, the 50 Fibonacci extension. So it peeled through that yesterday like it was butter at the end of the day, fighting to get above that today. Bulls definitely would like a settlement up above even that 50 Fibonacci level. This right here, when we're looking at the NASDAQ, big sell-off at the end of the day, off of the highs. But when we talk about these two dojis right here, you can see they're counter-opposing dojis, and I have a tendency to believe that when we see those inside of a market move, that is a continuation pattern. We're getting confirmation of that today in the NASDAQ. So I didn't panic or do anything yesterday. I just watched the stuff happen. I didn't add anything. I am still overall negative long deltas in my portfolio, so I just kind of waited it out. Again, you can see in the E-mini S&Ps a rally here up almost 16 points on the day. Not quite to yesterday's high, but getting very near that. You can see it's trying to break that little bit of a rollover that we're seeing in there. This is what I was talking about with the last 15 minutes of the day in the E-mini S&Ps. It was like a free fall. And if you were long, I'm sure you were like trying to sell through the bid in order to get it. It was so precipitous on the downside. Overnight inventory really didn't do anything at all. It was probably a little shell shock from that late day sell-off. And then as we're seeing the economic data come out, pretty decent economic data as well. We're getting that rally back to where we were for the most part of the day yesterday, where the point of control was. We're creating a point of control right where the point of control was yesterday as well. So market very comfortable at these levels. Not any more economic data coming out. I don't really have a discernible direction, to tell you the truth, with the E-mini S&Ps or the equities across the board. I'm trying to keep an eye out for things to take advantage of with high implied volatility. I'd like to sell some high implied volatility before we get back into this earnings, which, it's right around the corner. I just got done talking about earnings trades, and now we're getting back into them, so that's good. Also, Tesla had a big rally yesterday. I haven't done anything here, but I didn't chase those to get out of my short calls. I've got the short 355 calls in there. Remember, I told you I got very close. I was like a dime away yesterday, and now I am about $1 away. So still got a working order in there for those short 355 calls to get out at around, I think I'm working a $2 and like 40-cent bid. $2.40 bid, $2.40. The low yesterday was $2.26, and I was working a $2.15. So I got a nickel away and watched it run away. But I've got a bid in. I'm just going to leave it now for the rest of the day. And that's about it. Today's webinar, we're going to be doing on long call spreads, all right? I have specific rules in and around long call spreads in order to increase your probabilities of success. Find out how we set these strategies up in today's webinar. Also, if you are a fan of Steve Primos or you like charts and stuff like that, newer to options, maybe want to get away from just buying and selling stocks as a trade, I'm going to show you how to reduce your margin requirements, increase your return on capital in tomorrow's webinar. So check that out as well. You can find that at ProTraderStrategies.com also. Also, give me a thumbs up, thumbs down, like, dislike on this video. Will help me tailor it more towards you, especially if you give me a thumbs down. Let me know what I'm doing wrong, that you want to see something different, so I can try and make some adjustments there as well. Okay? So if you can't take that, take it easy.